New week, and it is US bank holiday, Martin Luther King Day today. Um, oh, hello. Hold on a minute. Let me just pop that there. Right, so I didn't take any trades today because obviously it's US bank holiday and it's a bit, just don't need to take a trade, especially considering the model is in the US session. So if you've not got institutional liquidity and volatility going into the session, there's not really much point in trading. But yeah, so I'm gonna go over price action today, news that's going on at the moment, and also this indicator that I've added a little bit more to, just for a bit more information. So starting off with the indicator, I've pretty much added, I've added in the session highs and lows, and I've also added in the New York lunch hour in purple here. So all the colors remain the same: Asia, London, New York Open, New York lunch, New York PM. Pardon me. And yeah, we still have the previous daily high, previous daily low indicator as well. And what else do we have? We have a big weekly opening gap, so this is going to be a big draw on liquidity this week. I seriously doubt that this will be left unfilled. We do have a 1 hour imbalance here. I think it might not actually be too much of a big deal, to be honest, but could potentially be a draw as well in terms of lower down. Yeah, as you can see, my notes today: Martin Luther King Day, no trades. Noting the break and retest played out before 9:30, so even if I was to trade today, it would have been before my session time, and yeah, it would have happened before I would have got in. So no trades again. Now, in terms of the higher time frame, we look at the daily on the S&P. We got this low here. I'm thinking either we come down, break this, sweep it, and then continue up, or this is the gap that we fill after sweeping this low here. Do still have this volume imbalance on the daily chart, so it's just worth keeping a note on that. But yeah, my reasoning for that thesis is, or that idea is, pretty much at the moment, we've got a lot of FUD coming into the market, especially with all this political stuff here. So, it's obviously quite tricky to trade in this. It's best to be a bit more defensive. But my thoughts is, as usual, this will be like a threat, and he threatens tariffs and stuff with all of this and Greenland and everything. And then after, a couple of weeks of the market dropping a little bit, oh yeah, we've secured a new deal and, everything's fine. And then we'll come straight back up again. Like, it's just the same way it's been orchestrated on the daily chart for the last, well, since he was in office pretty much. And it's just how it works. So we'll see. I anticipate quite a lot of volatility tomorrow after all the news and the fact that we are in a bank holiday today. So yeah, tiny bit more context on this indicator update as well, just before I get into my trade idea for the day if I was to take a trade. So you can see here, the highs and lows of the sessions are drawn out, and then as soon as they get mitigated, the lines will stop. So basically just to help me identify potential draws on liquidity, especially with the break and retest model. And yeah, so we dropped into new week, accumulated during the Asia session, And yeah, we didn't quite sweep the Asia high. And then in London, we came down, traded back up to the midpoint of that session here. We got the fair value gap, traded down again, swept the London low. We are still hovering above that that gap that I mentioned on the daily chart, but you know, price has moved up somewhat nicely. And in terms of the break and retest, you can see here the 8 o'clock 15-minute candle. Price broke down, retested 8:45 and 9 o'clock, and then went to take the London low. So the original, it took the London low also at 9:30, 9:35, around that sort of time. So the trade would have already played out beforehand. Like so, you know, 868 plus 2, 90, 93, no, 73 we'd want. And then we target 10 points. 5, 8, plus another 5, 3. There you go, London low, perfect. 3.1 to 1. Risk to reward, that would have been lovely. But, you know, as I say, wasn't going to trade today, bank holiday, and it wasn't within the model timing. And once the session started, once we got past the 9:30 open, you know, it did trade up, but not quite to the midpoint. And, you know, we got this bullish price action here, especially after sweeping the London low. So price just wasn't showing me any reason to go lower at this point. Maybe a potential pullback here to continue down, but either way, it didn't come back to the midpoint. So no trade. Now, in terms of what this is here, this is just me eyeing something up just to see what we'd be looking at. So from 11 o'clock, price pushed up and, you know, broke through this midpoint and retraced back into it. Entry long would have been at the midpoint, you know, 868, and then 6 points stop, 862, target the London high. So we'll see how that plays out, because what I've noticed from my sessions recently is that price does tend to go on a bit of a run past the end of the session. If it does sweep, sometimes it delivers a bit later than 11 o'clock. So you can see this is 11:10. And yeah, that would have been a nice retracement there. You know, I was sort of sitting just like messing around with this just to see what the risk to reward would be. And I think on the 3-minute, it was a bit clearer as well. Yeah, so on the 3-minute, we inversed this, traded down, and then I think there was a 1-minute volume in. Was it 1 minute on a 5-minute? It was a 15-minute. Well, no, either way, I would be looking for that to be a retracement, and then we ride price back up to the London high. Considering we got London high and Asia high, that hasn't been tapped yet, so I wouldn't be surprised if we see that get taken during the PM session. So that was the idea. Obviously, it's not the model, so I didn't trade it. And yeah, it's interesting. Another thing I was looking at as well to determine that potential bias would be, you know, we take the fib from the London high down to the New York low, like so. You can see price comes into the optimal trade entry zone around here. And we've obviously got this big weekly opening gap. One standard deviation lines up perfectly with the New York AM low from Friday. So that is potentially the move that you'd be looking for if you were trading a bit longer term. So, you know, you could put your entry like this, stop below the range, target that, and then you've got 4.4 to 1 like that. So it's a bit of a longer term. But yeah, nonetheless, like I say, no trades today. We'll go over the news for the week, just see what's going on. So tomorrow, again, no red folder US news. Thursday, Wednesday even, Trump is speaking, so we're not going to touch the markets there, especially around 1:30, so like the 8:30 a.m. when the futures market opens. It's very high risk. I can imagine a big whipsaw or just an absolute dump or a crash, depending on what he says. So, yeah, it's just a bit high risk doing that. And then got core PC price index at 10 a.m. on Thursday and Friday. Obviously, we're not trading Friday, especially with the red folder, so that's guaranteed no trades on Friday. So it could be the case that, what have I done here? It could be the case that, we don't place a trade this week. Maybe tomorrow we can look at longs. Like, we can keep an eye out. We'll have a look, see what price is doing here, because we could get, a quick move or, a sweep at the 8:30, and then the 9:30 open could present an opportunity. So we'll keep an eye out there. But yeah, I think Thursday is probably our best. Oh, we got final GDP quarter on quarter. So what is that? Is that Q4? Release date delay with 34 days government shutdown. Change in inflation, value of all goods. Yeah. Actual's greater than forecast. Yeah. 85 days. So this would be the Q4 GDP for 2025. And yeah, what we forecast, the same pretty much. So depending on how that is, that could be an incentive for a bias. But like I say, I think we're going to exercise some caution this week. That's the main takeaway from that. But if a good opportunity presents itself, then we'll have a look. We'll observe. And yeah, as you can see on the Nasdaq here, trade idea would have been correct there. We've got breaker structure here, fair value gap created, enter long here, target London high after the sweep of the London low. Keep it nice and simple, and we would have hit TP there. So overall, just a quick catch up today. Nothing too major. I'm interested to see how this indicator plays out going forward. As you can see, there are quite a few highs that haven't been tapped and quite a few lows that have now been tapped. So my thoughts are having this indicator will help me also identify, the trend of the market, at least within, so this goes back to Wednesday. So it gives us a couple days worth of session highs and lows to help identify like an intraday trend for the week. And yeah, simple as that, really. With all that being said, trade smart, trade safe, trade your plan, journal your shit, and yeah, I'll catch you tomorrow.